What's up, everybody, and welcome back to another exciting episode of CollectCo Connection, your one and only accounts receivable podcast. Today, we're excited to have Mr. Bill Perrella, the Director of Business Development at Sentry Credit, with us. With over 30 years of experience in the industry, Bill has been instrumental in helping Sentry Credit become a leader in both compliance and national recoveries. Sentry Credit serves a wide range of clients from large corporations to local businesses with a focus on protecting brands, mitigating risks, and maximizing recoveries. Their values of patience, persistence, and professionalism are at the heart of everything that they do. My man Bill, welcome to the show.
Hey, thanks for having me. Great to be here.
Yeah, so happy to have you. In fact, fun fact, how Bill and I connected in the first place is we met at NCUCA, was it the National Collection Credit Alliance, Credit Union Collection Alliance Conference, right?
Yep, the National Credit Union Collectors Association in
That's
Vegas.
right. That's so many different acronyms. That's NCUCA. I know that. I got it tattooed on my forearm,
There you
which
go.
is actually an awesome segue into some of the things I wanted to talk to you about today. For those of you guys listening, Bill has massive experience working with credit union service organizations or credit unions in general in supporting and protecting their accounts receivable process. There's a lot changing in that landscape, both from an SOP process landscape and even into kind of compliance and regulation factors. So, Bill, just kind of wanted to pick your brain today on your experience inside of that credit union outfit and see what you can share about any trends or directions that we're heading in the future.
For sure. Absolutely.
Um, so let's kick it off. Can you describe, just like overhead view, what are some of the unique challenges that credit unions are facing when it comes to collections right now? And like, how do you think that that's different than maybe any other general creditor and their accounts receivables?
Right, for sure. So credit unions are unique in the respect that they're member based. So oftentimes they're very demographic to their location. So perhaps it's construction workers, or it's city employees, or it's a telecom company. There's a variety of different ways that they serve their membership base. There are several large ones that are national, but
Hmm.
pretty typically they're very demographic to a local community. And their job is to serve the community, serve the members, and as they say, serve the underserved. So that can definitely make it unique because they're a lot more in touch with their members. So the difference between that and a lot of large financial institutions is that banks are different from credit unions. And credit unions are not for profit; they're there to
Right.
serve their members. Banks, while they do a fantastic job as well, it's a different relationship with the customer and the consumer in the financial space versus the credit union space.
Makes a lot of sense. I mean, going an expression that we use a lot is LTV, lifetime value. I feel like that kind of hits a little closer to home for some of those credit unions because really their president is protecting the member and their experience within that facility. So super interesting. In terms of like internal strategies, what do you recommend for credit unions to enhance their debt recovery process or minimize delinquency rates? Like, what should they be doing internally prior to assignment that you think would really help them kind of decrease how much that assignment might consist of?
Uh, for sure, reaching out. So, with credit unions, they have two different books of business. The main driver of their growth is auto. So,
Hmm.
a lot of them do the credit cards, some do the mortgages, but direct and indirect lending is what credit unions thrive on to build their member base. So, direct, just to give you an idea, is you're a member of the credit union, you decide to go in to get an auto loan. That's a direct loan. You go
Hmm.
down to Joe's Auto down on Main Street. They've got 20 different lenders they can do you through. That's indirect, so that they wind
Got
up
it.
farming the loan out to the credit union. The difference being is that the member has a share account with the credit union and possibly some other loans. The indirect loans, they have a 2022 Toyota and a $5 share account, and they barely know who their lender is. So
Ah.
and we'll get to those 2022 loans in a minute because that's definitely a big driver for everybody. But that's basically the difference in those. So the reaching out and the strategy wise, really starts at the beginning of the loan. Reach out to the member, even if, especially an indirect, say, hey, we're the ones who financed your car. And then you can obviously offer them a swath of other products and
Mm-hmm.
loan types and such like that. But reaching out internally and developing some internal strategies. So I know we're going to cover digital a little bit later, but just to kind of sprinkle it in, something I found with my clients, and we partner with everyone in the credit union space from, $50 billion down to little local tiny ones. So
Mm-hmm.
trying to get a digital strategy with some of the vendors out there that offer the tech solutions, right?
Right.
So right now, in order to reduce those delinquencies, a reminder message at 5 days prior, 3 days prior, a day prior, and the day of. After that, you can continue to use your digital if you want, but if they
Mm-hmm.
haven't responded to any of those, you need to start dialing the phone and you need to start reaching out. And the other thing is that with those messages, the most effective way to do that is either offer them a link to a payment portal so they can make that payment right there, or a phone number to contact one of your representatives. Because some
Mm.
people get caught up in the two-way text, and all you have is a bunch of MSR sitting there with 20 boxes on their screen with a bunch of
Right.
meaningless conversations.
Right.
Um, you want them talking to someone so they can get the information from them, what changed, what's their hardship, and how can they help.
Yeah. Quick follow up on that. Would you say that the level of like contact information or due diligence for a direct would be different from an indirect? Like sometimes you don't have all of the information, be it an email, be it a mobile number separate from, well, I don't know. I don't even know if people use landlines anymore, but just is there kind of like a due diligence separation between what you're seeing from direct and indirect?
Yeah, so with the direct ones, a lot of the disclosures and paperwork for consent and other things is baked into their contracts and
Right.
applications. With the indirect, depending on how good their salespeople are dealing with those indirect auto lenders or indirect dealers, they may or may not get all of the information over to them, and they really need to
Yeah.
work on standardizing their application and their contractual processes.
For sure. Yeah, you're kind of relying on, Joe's auto shop down the street to make sure that you're getting every single line that's applicable for
Mhm.
that what if that could happen. Dang, super
Exactly.
interesting. Um, so let's kind of jump into the next step is you send your reminder messages, you're obviously getting ghosted, maybe the contact information isn't valid to begin with, which kind of drives us onto credit union service organizations like a debt collection agency. So like
Hmm.
what factors should credit unions consider when they're choosing a debt collection agency? And, what kind of like finite details does your team pitch to kind of like ensure a successful partnership?
Well, and you hit it right on the head. It's all about a partnership, right? So I learned years ago, I had a client tell me, "Hey, Bill, there's vendors and there are vendor partners, and you guys are a vendor partner. You know, our success is your success, and vice
Hmm.
versa." So really choosing one that's going to represent your credit union properly, both in the first party space, which is a huge thing right now, the early stage intervention that agencies that can offer, such as Sentry Credit,
Yeah.
um, is different. So the credit union space has I don't know how to best describe it. People, when they're there, Mary has been there 912 years. Okay. In the
Hmm.
collection department, she might as well be dialing with her knuckles, and you're lucky that they get 20 to 30 calls a day. That
Right.
happens in the industry. It's just, it is what it is.
Right.
When you outsource to another loan servicing partner, they're bill collectors. Our people dial 100 to 150 dials a day. They're making sure they're constantly reaching out, getting penetration, using
Hmm.
every form of omni-channel that you possibly can if you have consent.
Yeah.
And then and realizing that right now at 60 days, 8 out of 10 loans are charging off. Everybody saw it. It started with the credit cards, then it went to the
Hmm.
autos, now it's in the mortgages. On top
Yeah.
of that, for credit unions, NCUA a few years ago during COVID, they were like, you guys can't keep stacking all this cash. You need to lend to your member base. Well, what was your option to lend? 125 to 140% of book value. Well, now
Right.
the auctions are seeing 60 to 80% return. And if it doesn't sell the first time through the auction, you're really in a lot of trouble. So to kind of give you an idea, deficiency balances pre-pandemic with the credit union space averaged about $7,500, maybe $8,000.
Mm-hmm.
Right now, they're at $12,500 to $13,000 because of those differences. On top of that, the loss reserves you have to have for your charge-offs now. So if you make an auto loan and your typical auto loan is having a $10,000 deficiency, every time you book one of those loans, you got to take 10 grand and put it in the side, excuse me, as a cash reserve for that loan, which is incredibly burdensome for credit unions. So really focusing, excuse me, on that beginning of the delinquency and getting a hold of that member and making sure that you're reaching out and finding out their situation is imperative. And then choosing, for your charge-offs, a lot of credit unions make the mistake of suing everybody and hoping that they're going to be able to recover the money later. Mm-hmm. I've learned that, if you have a loan that the member has property, perhaps you want to look at doing that. If you employ an attorney firm that will actually go through with the garnishment and they have a JOB that makes sense, then spend the money to do that. But if you're spending $2,500 a whack on an account just because it's over $5,000 and it's a charge-off, is a horrible waste of their resources and their money. Most agencies have the ability to go legal on them anyway. Let them take the risk. Don't put all that money out, because what you're going to do is call me in 2 years with a sack of judgments and ask me if I can collect on them for you. And Bingo. It's just been a big waste of money. So, and the other mistake that some credit unions make is, they'll be $500 million, which is a small to mid-sized credit union, but they have to have 3 collection agencies. Let me tell you, that is a huge, huge mistake. If you are under $5 billion and you have a good partner that you feel you have a good relationship with, you don't need another agency. Over that, it's reasonable to split the buckets and be able to compare and contrast. But really, if you are committed with your agency and you've picked a good partner, there's no sense in sending these people 3 accounts and this one 2 accounts. Just keep it all with who you know is going to be good and that you trust.
Yeah. Well, and allow that primary to kind of thrive, to continue to grow from the experience. They obviously are hands on deck to your whole portfolio. And so I really feel that does help that kind of mutually beneficial growth and understanding of what is the exact nature of some of these accounts that we're calling on.
Exactly.
I want to go back because you just dropped tremendous value, not only to myself, but our listeners. One, I want to circle back to the early intervention and even offering the first party stage. I think that's tremendous. And to your point about 9,000-year-old Sally or Sue, that early intervention stage, I feel like, can be the make or break on the probability of recovery. It's you're being proactive, you're staying ahead of the curve earlier rather than post delinquency. And I mean, to be fair, an outfit like Sentry Credit, you essentially are going, hey, look, I get to use all of the fancy tools of communication that I have for my standard debt collection in any case. And now I get to employ those fancy tools with a more amicable stance and practice and get in front of these guys ahead of the curve. So
absolutely. And, again, that first couple of weeks of reaching out, because you're going to identify if they're not at least returning the call and giving you updated information. Hey, I get paid in 2 weeks. I got laid off, whatever. If they're just not speaking with you, they're going to stick their head in the sand. And the other big mistake that a lot of credit unions make, excuse me, just getting over COVID.
No big.
Is that, no big deal. Is when they repossess the car, right? So, credit unions, God love them, they will, really give the member every last ounce of possibility before they have to do that. But what they have to realize is, let me back up. Something that's helping a lot of credit unions is going back into the old COVID bag, right? During the pandemic, there was a lot of skip-a-pay action going on. There was some rewriting of loans. There was some forgiveness in there in the terms and redoing things. Going back to that bag of tricks right now to avoid those charge-offs severely helpful, is very helpful to a lot of credit unions.
Oh
But
yeah.
starting that repossession process at 45 days, I see some credit unions that aren't repoing until 120. So what's
Mm.
that mean? That means the car's junk. The person is looking outside every day looking to see if it's there. So the care
Yes.
and concern for the vehicle, it's almost like it's not their car anymore. They're just borrowing it. They know
It's an
it's going to be gone.
impending doom. Exactly.
Impending doom. So how do you care for your impending doom? Not very well. Guess what?
Yeah.
That goes to the auction. No matter how much remarketing and everything you do to it, it's still not going to be a valuable asset to recover as much money back for you as you would have likely gotten if you hook it at 45. And the flip side of that is if you're hooking it at 45, the amount of money that the member has to come up with to redeem isn't as bad. It's possibly doable. So either you're
Right.
going to get more money for the vehicle because the condition's better, or the members can have the opportunity to redeem for hopefully a more reasonable amount. And then that way,
Yes.
either way, the account's resolved and everybody's happy and you're serving the member. And sometimes the best thing you can do to serve the member is tell them to turn in the car. Listen,
Yeah.
you're 10 grand upside down in this thing. You just, you're working part time, your spouse is ill. It's not going to work. If I'm not going to repo it now, I'm probably going to have to get it in 30, 60 days. The best
Hmm.
thing you can do is just surrender the vehicle. And that sometimes is the best thing you can do to help your member.
Yeah, no, and look, you know this as well as I do in our shared industry. The hottest commodity, especially with reaching out early, is engagement. You can tell so much about the probability of what's going to happen at your 90, your 120, your 150, just purely on the basis of engagement. And
Mm-hmm.
flagging some of those ghost figures earlier kind of give you that heads up at, okay, this is the long game path that I'm going to need to take. But to your point, the leverage component of you being right in front of them earlier at that day 45, and even sprinkling in some of those pre-COVID tricks that you have to be flexible. Hey, look, you need to skip a pay. All right. We're going to allow it once, but I'm going to be with you. You need to keep engaging with me. All of these kind of flexibility leverage tactics, I feel like we're really working to the success of healthier AR for these guys.
Nope, absolutely. And one other thing is when you do have that outreach and you do have the member on the phone, one of the biggest things that I emphasize to people when I speak at different conferences is, collections in rocket science. Full and complete information on every call is imperative
Yeah.
because perhaps they haven't been delinquent in 3 years and now all of a sudden they are. Well, they don't work at the same place they did 3 years ago. They don't live at the same place they were three
Hmm.
years ago. And all the companies with, the license plate recognition, all that stuff is great, but I'll have credit unions be confused. They're talking to the repo guy saying, "Hey, I know the car's in Louisiana." And the repo guy's like, "I have a camera hit on it last night in Texas. Why do you want me to go skip this address in Louisiana when I know where the car is?"
Yeah.
So, making sure you're getting that updated information. And again, you can treat that as a red flag if they don't want to give you. If you go, "What's your current address?" and they go, "What do you show?" then you know
Yeah.
that the person is up to
That's
something.
one of
Same
those
thing with their
triggers.
job.
Exactly.
So being
Exactly.
smart in those ways is really imperative because you may not get the member on the phone again. All of a sudden, you're having to do all this skip tracing and all that stuff when, that might be your only shot. So
Right.
bleed all the information out of them that you can. So that way, what you're working with and you have hopefully the most up-to-date information when the thing goes bad.
Yeah, no, such a powerful bit that you just spoke on is having that information beforehand, and I'm sure you call it the same. It's strike while the iron is hot. This you may not ever get this person back on the phone, and so the let me get back to you, let me look in, let me check with the whomever.
Mm-hmm.
Those type of missteps are pretty much what shoot yourself in the foot to begin with. So
Yep.
just same page, Bill. Um,
You don't got to
let's
reinvent the wheel. You might polish it up a little bit with some different things, but
no, right?
collections is I've been doing this 30 years and other than the regulatory compliance landscape that has changed,
Right.
The human interaction is what it is. They're either going to
Stays the same.
convince you
Yeah.
they can't pay the bill, or you're going to convince them they can.
That's right. Going back to this isn't rocket science.
Nope.
I want to jump into, and you mentioned it briefly earlier, just on like the digital technology inside of collections, or even with like credit union service organizations or the unions themselves. Right now, especially since it's advancing, as AI, like every single week, there's a new trick. What role do you see technology playing in like modernizing and improving the credit union collection effort? Or like, are there specific tools or platforms that you guys are using right now that you've kind of seen across, 30 years of experience going, hey, this is a major game changer. This is a real benefit.
Oh, absolutely. I mean, as far as the text and email solution is a great idea. The chat bots are really neat for basic things. I
Hmm.
think that can serve well for things like what's my routing number. Those are little things that you can take away from the manual processes with a live person.
Hmm.
But technology is never ever going to replace the empathy that somebody can put on a phone call talking with someone who maybe their spouse just got a terminal illness or their kid is going through it or
Couldn't
whatever the
agree
case may
more.
be.
Oh,
You can't hold their hand with a chatbot. So they serve a purpose. I mean, if your effort is this, it can reduce it by enough where maybe you can allocate a couple extra of those assets to more of the live functions that you have to be able to
hmm,
do, and let the low hanging fruit, as it were, get taken care of with the text and the email and the
yeah.
chat bots. And making sure also to protect your credit union. I'll give you an example. We get consent, excuse me, on almost every call. So if you get consent on every call, then you really mitigate your risk in your
Hmm.
campaigns that you utilize for the text and the email. Not to mention the fact you can save money with the notices, post-date notifications, account statements. If someone's willing to receive things digitally as opposed to in the mail, you can see a significant reduction in your costs there as well too.
Yeah. So it looks like technology is both meeting an efficiency level for the standardized type of it. What's your routing number? Where do I submit this? And then to your point, yeah, from a cost overhead, the ability to utilize channels like SMS, obviously email's been around a little bit longer, a massive cost protective measure in comparison to UPS, USPS, send it in the
Mhm.
post. Maybe you get it in 4 days. Maybe you didn't. It dies on your kitchen counter type of thing.
Yeah,
So,
exactly.
man, just fascinating. And I think that with the rate at which new kind of technological advancements are shining a light, like I just talked to someone last week on the first AI regulation. I think it was the EU AI Act that they released in Europe that kind of touches base on like, hey, how are we using this technology and these millions of data points, but still kind of preserving the integrity, privacy, and protection of consumers? You can't just sell the entire farm at once with some of these new tools. So I anticipate that's going to happen stateside sooner or later for us as well.
Oh yeah, as soon as they can figure out how they can integrate that with certain rights and freedoms people have versus the other, it's gonna be a slippery slope for a minute.
N- No, it definitely will. Again, won't grow up to rocket science, but I feel like with some of those additions, Bill, we're getting close. We're getting
We
close to
are
rocket. Okay. Um,
almost.
Almost there. I know we're running short on time. I just want to hit you with one last question, and then we could wrap it up. And really, this is just on the basis of like member communication strategies. What strategies work best for credit unions? And we kind of touched base on it, but what are like the key strategies, channels when you're dealing with delinquent accounts and maintaining a positive member relationship?
Well, it's again, it's all about outreaching in numerous ways so you can meet them where they want to be able to be met.
Right.
Um, and also, credit unions have a lot of data available to them that they don't utilize, or they don't know they have.
Hmm.
For example, what a lot of credit unions do is they employ like a Credit Karma, for lack of a better way to put it, one of those vendors out there that will give the member their credit score. Well, it turns out it only costs the credit union about a penny per member per month to do this type of thing.
Yeah.
But what do you get from that? You can ingest all of their data back into the credit union. So if somebody had an 800 credit score when you gave them a loan and now it's 550, ding, 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 that might be something that you want to reach
Get
out
that
to.
trigger.
And hey,
yeah.
how are things going? We're just checking in because we love you. And then gives them a chance to be like, it's so great that you called. I happen to be going through a rough time. So, giving one guy in the credit union space told me, he says, fish where the fish are. So you want to make sure that where you might have a member base that, if you're calling them at 8, 9 o'clock in the morning, they're not answering because they work. It used to be historically in collections, 8 to 10 in the morning and 4 to 6 in the afternoon was your live time. Everything in between you skip traced. Well, guess what? Most people answering the phone at 9 a.m. probably are not employed. They could be, but nowadays the most best time to be able to reach people is 11 to 1. They will talk to a bill collector all day long during their lunch. Not when they get off work and they're going to have dinner and see their family to be reminded of what they're going through. But 11 to 1 every day is what is prime time these days. And a lot of credit unions really should focus their efforts during the hours of the day they know work. Maybe 9 o'clock in the morning is when you call the reference because you haven't been able to reach them in 60 days. Or their employment, see if they're still working there, verify the things. But, really having a strategy in the first place, if you don't have much staff, allocate staff you have on the early, and maybe one of those people can work on the late. You don't want your roll rates to keep going up and everything. So try to deploy the people in where it makes the most sense.
No, totally understood. And I think the CFPB would appreciate us discussing that customer preference matters, whether it's
absolutely
contact me at this time or contact me at this channel or do not contact me at this channel. All of these things and metrics performed at that early stage to the member themselves, I honestly feel like it makes all the difference in the world. So CFPB, that one's for you. All right.
Well, and it's funny you mentioned the CFPB because a lot of credit unions I speak with, they go, hey, we're not $10 billion. CFPB doesn't really apply to us.
Right.
Well, it's like I have a lot of friends with the CFPB, and what I've learned is it's not a problem until it's a problem.
Until it's a problem. And then it's a big problem.
And if any of your folks have ever gone on the CFPB website, it takes about 90 seconds and a second grader can make a complaint. You don't have to have anything to back it up. And that's fair. It's okay. But if you ignore them and think that they don't matter to you, and then you get a complaint and you don't respond, for those of you out there that have never had the pleasure of a CFPB investigation, it's many weeks. It's in your company. You will pay for it. And there are many other medical procedures that probably are way more comfortable than what one of those can do. And, and anytime you get audited, by regulators, they're not there to find nothing. So, you might uncork a larger can of worms than you'd ever anticipated. So
exactly.
Whether it's Reg F or Reg Z, any of the different things that are out there, if you adhere to the FDCPA, you can't go wrong and you can't have any problems. And there's a reason it's there in the first place.
No, definitely. So, everybody listening, you heard it here first. Not only are you avoiding a strenuous compliance heat on your organization, but also you're securing a positive member relationship as well. So I would say chips on the table. Let's do everything that we can to adhere to those regulations because it's a win-win on both sides, right?
Absolutely. So, just do it the right way.
That's right. Well, we're getting towards the end here. Bill, I just want to thank you for coming on. I think that there's just fascinating value that you added, not only to myself, but through your 30 years of experience working with credit unions. I'm looking forward to getting some more FaceTime with you at some of these upcoming conferences that we're bound to run into each other at, and just really appreciate you coming on the show today, man.
Hey, I'm grateful for the opportunity and happy to be a part of it.
Absolutely. All right. For those of you guys listening, I'm going to go ahead and put all of Bill's contact information, his LinkedIn page, a little bit of information on Sentry Credit in the description box below. And Bill, my man, we'll see you next time.
All right. Thanks, Chris.
Thanks so much.